Hi, folks. Welcome to the Contrarian Trader. This is Robert Desmond. It is Saturday, October the 23rd, 2009. Folks, what a week, huh? This past week, another week. I've never seen an earnings season with so many companies beating expectations. Never in my life. You watch CNBC, the cheerleaders are on there, and roughly 70 to 75% of all companies out there are beating estimates. They're knocking the cover off the ball. That's their favorite catchphrase. Knocking the cover off the ball. They're beating estimates. The one question I have is this: whose estimates? Who set these expectations? That's the question I have. And the answer is it's the companies. They knew last quarter to set the bar very low. And they, during their conference calls last quarter, they set the bar very low so that come this quarter, when they report earnings, they could comfortably say that they beat earnings and that their guidance is in line for what they had expected. So they underpromised, over-delivered according to their numbers, but they knew back then what what they could reasonably expect to occur, so that way their stocks can get popped higher. It's a game. It's a show. It's a game. It's a sham, and it's falling apart. It's slowly but surely falling apart. If you watch the pattern here right now, you're seeing like companies like Intel popped higher after hours. It's lower now than before earnings. JP Morgan, it popped higher, now lower after earnings. Yahoo, Yahoo reported earnings, knocked the cover off the ball. They they beat on revenue. It was only one problem: one times a one-time non-recurring revenue source. They sold their stake in Alibaba.com. What are they going to do for the next quarter, this quarter's earnings, when they report next time? How are they going to get revenues up? What are they going to sell next? You need to see sales. Sales need to be higher. You need to see companies raising dividends and also issuing stock buybacks. That's a sign of a healthy company. Not that beat on revenues because they sold a stake in another company. That's a one-time recurring thing. You want to see that their sales are growing, their margins are widening. You're not seeing that. Beating expectations is a joke. It's because they set the bar low last quarter, excuse me, so that they can comfortably assume that this quarter they can beat. It's a joke. It's a sham. Don't fall for it, please. Let's take a look at the S&P 500. We have run into rock solid resistance at the 1100 mark, as you'll see here. The one thing I will say, although I've been bearish, you're not seeing huge selling yet. So what I'm expecting is that we're going to see some consolidation here, and then after this earnings season, that's when you're going to start seeing the true breakdown of the market and probably that down volume pick up. I, 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 you'll note that I don't have a resistance bar painted above here, annotated above here, because I don't see the market going any higher. I think that this 1100 level is it. So I could be wrong, but that's just my opinion. Also, take a look. You're seeing a breakdown. It's going to be very difficult for the S&P 500 and the Dow stocks to proceed higher when you have the Dow transports, the transportation sector, declining. It broke its 50-day moving average last week. If we were in such a vibrant economy and all these stocks are breaking out to new highs, why are the transports breaking down? Shouldn't they be rallying in expectations of new business, new shipments? That's what I would expect. But what do I know? Last week I mentioned the VIX and how it looked as though it was forming a double top. Now, this past week, it didn't make a new low, but it reversed. It started the week out higher. It didn't make a new high either, but it finished on the low end of the week. That's a sign of weakness. And what you see here, unlike with the S&P 500, you see rising volume on the downside. So be very, very careful. I don't see how the Nasdaq is going to proceed higher when you have the IWM, which is the ETF for the Russell 2000 small capitalization stocks beginning to break down. You have your double top, you're seeing rising down volume. It's threatening to take out its 50-day moving average. Be very, very cautious with putting new money to work here. The VIX, it bounced off support 2 weeks ago. The previous week, it looked as though it was going to break down because you had a reversal of the previous week's reversal. And then last week, it reversed the reversal of the previous week. So it was showing solid support here at 20. There's a little bit too much complacency coming into this market. So what you have here, basically when you see the VIX begin to rally, you're seeing put buyers coming and seeking protection. What do I think the next catalyst is going to be for the market to head lower? What is the expectation as a contrarian? What is the expectation that everybody assumes is about to occur? Everybody's assuming that there's going to be a breakdown in the U.S. dollar to new multi-year lows. There's only one problem with that. I don't think it's going to happen. I think that because you have everybody looking for that dollar to proceed lower and you have people shorting the dollar, you're going to have eventually that call go out to Goldman Sachs and JP Morgan, who are making money off their trading operations. Remember, JP Morgan lost money on the consumer end. They made money on their trading operations. How do they keep that going? Well, what they're going to do is they're going to place a call to their friends over Treasury and the Federal Reserve and say, you know what? Enough of this this easy money stuff. Let's squeeze the shorts on the U.S. dollar. Let's take some of them dollars off of the market and squeeze the dollar, because now what have they been doing? Here, take a look at the dollar. Look at this. Back on the 21st of September, you saw a beginning of a bottom get put in on the U.S. dollar. Back over here around the 12th, I put out an alert to my subscribers saying, you know what? Let's take a look at getting long the U.S. dollar, because I had a hunch back then that the game that they were going to play was to try to squeeze the shorts on the U.S. dollar and make their money coming into the next quarter on a long dollar trade. So my bet is that you're going to see the U.S. dollar head higher. Take a look at the bond yields. This is another reason why we're going to see the U.S. dollar, the market begin to come under pressure, is because this free money is going to start to dry up. Now, you can't have interest rates down so low and expect the dollar to rally without yields going higher. So what you're seeing is, and I've told my subscriber this weeks ago, to watch for strength in the bond yields. And sure enough, you're starting to see, this is a weekly chart. You're seeing a definite consolidation here on the 10-year bond yield. Same thing here on a weekly basis on the 30-year bond yield. This is how they price mortgages. People are basing their mortgages on the 30-year bond yield. What's going to happen to housing when you have the 30-year bond yield begin to raise higher? It's going to take that many more people off the eligibility list to be able to qualify for a mortgage. What's going to happen to housing? It's going to collapse again, which is what we've been predicting. The financials, look at them. Reversal last week. They couldn't make a new. They couldn't hold their gains. It looks like the financials, they're going to come and try to threaten this uptrend line here. Again, if the dollar is going to rally, if it's going to decline and break down to new lows like everybody's anticipating, why does it look like the commodity sector is about to break down? Look at this. This is U.S. steel. You have a head and shoulder formation forming here, and it looks like it's ready to break down. Let's take a look at NVEC. This is a trade that Cramer, I mentioned this a few weeks ago, put on on 9/24. He issued a buy rating here. This man has his own show. I can do better than this. Look at this stock now. I told you back then, don't buy this stock. It's a joke. Stay away from it. Sure enough, He issued a buy alert back at 56. It's down to 42. Nice trade there, Jim. Um, Charles Payne, what happened to like nice guy? He issued a buy alert back here on Dollar Tree. Look at it now. It's ready to break down. Folks, you can't listen to these people. Please join the Contrarian Trader. Let's get short this market. Stick with me. I'll give you alerts on a daily basis, and let's trade together. Get short this market or go to cash. Visit the site. You have a question, Bob at thecontrariantrader.com. Good luck and have a great trading week.